I think it's important for the common investor to know, understand, and feel comfortable with running their own race. There are tons of influencers in the finance space, and it can cause you to feel at times that you are not doing enough, right? Or that you're doing the wrong thing, or even that you'll never reach the level of some of these other people that you see that have amassed hundreds of thousands to millions of dollars. And I'm speaking from experience here. I know how it feels. When I first started, I remember getting to a point where I was overwhelmed. But listen to me when I tell you to learn to run your own race. Learn to run your own race. Study, plan, and then execute, and you will be fine. You'll be fine. So here on Play of the Day for today, I've been talking about the last video. I've been talking about the severe drop-off in real estate assets within the market due to inflation, loan rates, and the cost of housing and property. As a result of these things, we're seeing record highs when it comes to becoming a homeowner and purchasing a home, right? And we're seeing the REIT industry of the market take a major decline in share price, which reflects the cost of interest rates and loans, which in turn begins to affect the shareholder sentiment, and people start selling off shares in a panic. But I told you all before that we're not investing with our emotions. We're investing with a plan of action and strategy. Now, if you watched my last Play of the Day, I talked about the accumulation phase as it pertains to investing in the stock market. And you recall that I said that there is no shortage of REIT assets that are on sale, that are currently on sale in the market. It's a fire sale. If you have the capital or even just a few bucks extra to spare, instead of spending $1,000 on Christmas gifts that'll be forgotten about 2 days later, instead of doing that, why not plant a seed somewhere else like the stock market to take advantage of some of these deals, some of these steals that we're seeing, the record lows that we're seeing that are available to you right now. I gave you some of the REIT market plays where you could take advantage of the record low asset prices like Realty Income, Agree Realty, among others that are considerably more risky like Prospect Capital, AG&C. All of those guys, all of those stocks and assets are at record lows. All of those, and they cover different areas of the REIT market like consumer discretionary businesses and commercial properties. So it spans the gamut, right? But for today's Play of the Day, I'm bringing attention to yet another REIT asset in the market that has been beaten down over the course of the last year. That being Public Storage, ticker symbol PSA. And this is a stock that is also set apart from the rest of the REITs that I just mentioned. Now, really quickly, what is Public Storage and why would you ever consider investing in this company? First, I'm going to give you the textbook explanation of who they are. Public Storage is an American international self-storage company that is run as a real estate investment trust. It's run as a REIT. It's the largest brand of self-storage or self-service storage spaces in the U.S. And since 2008, it has been one of the largest of 4 publicly traded storage REITs that exist. So off the top, you're getting a company that is at the top of their business industry. This is the equivalent of McDonald's in the fast food industry being at the top of their game. They are number 1. At the top of their class within their area of business. And their share price reflects this because you are looking at a hefty share price of around $236. Now, I know what you're thinking. Okay, $236 is a lot for one share. But with fractional shares taking over the investment game, that's not something that we need to worry about anymore. Because I would much rather you focus on making a great investment over time. So you buy a little at a time, $10 here, $5 there. It's about building the foundation of something stable and rewarding. Building something to last. That's what we're doing here. And you got to be built for it tough, all right, for the stock market, because there are going to be these periods where it feels like you have made a critical error somewhere. It's going to feel like that along the way. And you would have been better. It's going to feel like you would have been better off buying that Amazon cart that you got saved, right? But I promise you, if you stick to your guns, if you stick to your task, if you stick to your plan of action, in the end, you will be rewarded. So let's get into it. I'm just going to go over this stock very briefly and give what I think about it. This is something that I'm going to be purchasing very soon. Actually, this week, I'm going to be purchasing a little bit of Public Storage and adding to my account. So overview, let's look at the last year. Hold on, let me do this. Okay. All right, so let's look at the last year. On a 1-year chart, they are down 23%. They're down over 23%. Now, 5 years, max or 5 years charts, we're looking at they're up 18%. So that's certainly good. They've been doing well. You know, you see these drop-offs here in 2020, which is around pandemic times, right? That's what you're seeing there. And obviously, the pandemic, of course, would affect their business, because if you are a business that is predominantly focused on servicing people and providing a service for the people, well, if everybody's staying in the house, nobody really needs to go out and rent storage space for what? You're not doing anything. And a lot of businesses were closed during that time. So again, you're seeing the pandemic 2019 and 2020 affect their business as it did a lot of other businesses and mostly everybody else, right? It affected the entire U.S. economy. But 5 years, that 5-year chart is still strong. They're damn near up 20% over 5 years. 1-year chart, down 23%. Down 23% on the year chart. Year to date, down 15%. So this is an opportunity is what I'm seeing here. That's all I'm seeing, y'all. I know y'all see the red. I see the red too. But what I also see is opportunity. And when opportunity knocks, you got to answer as an investor. So let's go over to the financials. Let's see what they're doing a little bit. You see their revenue growth. Now, their revenue growth has been pretty amazing. Now, to give a short explanation, let's see what we got here. Year over year, okay? Revenue growth is how much a company's revenue has increased compared to the same time period 1 year ago. So you see year after year after year, the revenue growth has been increasing, and it increased exponentially from 2020, again, pandemic era, to 2021. They saw damn near a 15% increase in revenue. And then even from 2021 to 2022, they saw an increase of nearly 5% revenue across the board. So you see that they are doing well. They're doing well. They have recovered from that pandemic era. Again, you see right here, if you drop down to the net income and the net income growth, 2019 and 2020 was a rough year. And it's not just them. It was every business, right? It was a rough year. But what I want to do is go over to, y'all know, we want to hit the cash flow. I want to know, what acquisitions are y'all making? You can see here where they're spending millions on new acquisitions. And they made quite a few acquisitions. In 2022, you see the operating cash flow is up from 2020. They have recovered mostly. And I want to see their free cash flow. Right there you go, right there. Free cash flow. And then you see the free cash flow growth right here. So this is a company that is doing well. Again, number one at the top of their industry. Number one. I want to take a look at the balance sheet just really quickly. I want to see what their debt is looking like. Okay, so their debt Their debt from coming out of 2020 into 2021 was really high. You can see that they've been paying some of that off. They look like they're in good standing as far as 2022 goes, though. Again, they have managed to recover quite well. Quite well. Let's go over to the forecast and see what we got. So according to 7 stock analysts, the average 12-month stock price forecast for Public Storage stock is $307.71, which is about $70 above what it is today. That's saying that, listen, we think that this thing pretty much has the potential to be worth $70 more than whatever the price is today, which is $238 now. At the time of this video. So it says it predicts an increase of 28% or nearly 29%. The lowest target is $250, which is still $12 higher than what it is today. And the highest is $365. That is what analysts are saying. Of course, remember, analysts are just like you and I. They're just normal people that have thoughts about companies in the stock market. All right? They're nobody special. On average, it says that they are saying that Public Storage stock as of right now is a strong buy. Of course, you don't just go off of what somebody else says. You need to learn how to do your own research. Come in here and learn how to analyze these companies. Learn how to look at the 3 income statements, financial income statements, and come to your own conclusion of whether or not this is the asset that you want to invest in. Again, $238 is a hefty price to pay, but with fractional shares, that's no longer a thing. I don't even worry about it anymore. I don't worry about how much the stock price is in terms of if it's too much or not, because we got access to fractional shares. If it's a great company, I'm buying it. Let's go over to the dividends, which is why we're here. You see the dividend growth. Now, I want to mention that the dividends haven't always been great, but you see that they have a long history of paying out dividends. This is a dividend chart right here. They have a long history. Now, you saw a dip, a dip again around 2018, 2017, and then, of course, they stayed down, which you could expect, and then they shot up around 2022. So around the end of last year, that growth shot up. Let's see if it's reflected here. Yeah, it's reflected here. All right, so let's see. Public Storage has an annual dividend of $12 per share with a forward yield of 5%, 5.03%. The dividend is paid every 3 months. And the last ex-dividend date was September 12, 2020. Okay, so they are quarterly. This is a quarterly dividend payer. But again, look at that dividend, y'all. I think that 5% is very, very, very good for a company that is at the top, that is like this. For a company like this, for a company that is at the top of their game, 5% is incredible to me, all right? That's to me. So look, that's all I got for today. I'm not going to hold y'all forever in this video. I just wanted to point out a company that I think is a great buy right now. I think it's on sale. I think if you can get in at a great opportunity, this is a great opportunity for you to get in at a great share price. I will be investing in Public Storage, but that is me. I'm not telling you all to follow me. I'm just trying to give you all and open up the field and expand your horizons and have you look at some things that I think are great, might be great place in the market. But listen, remember to invest diligently, but more importantly, invest responsibly. And I'll see you guys in the next video. Later.